Felix here. Welcome to this pre-market live stream. And I want to walk you through 5 things here that I think really matter. I'm just going to get Winston on the screen here because, of course, that's essential. To start any good day, you need a large nose. The first point is why no one understands this enormous cash injection just about to hit the market, but you will in the next couple of minutes. Number 2, why the US economy is actually slowing and why stocks will therefore soar. Bit counterintuitive, but it's important. Number 3, why the big, beautiful tax bill just got a lot more beautiful for us investors, and why trade deals equal stock market rally. And then there is one truly unprecedented move that's going to make, well, fortunes, I'd say. So that's what Winston stuck up today. Of course, none of the following is financial advice. The information is so hot and exciting, I had to take off my jacket. It's rather unusual. It's that sort of a day. So if you're going to find this information useful, here it is on the screen again, then put a U in the chat for useful. And of course, as I say, Winston responsible for the whole shebang. So I need to pour myself some water. So Winston Cam, I know it's the best invention ever, right? There are also kittens around somewhere, but they're a little harder to pin down. So we'll have to make do with Winston most of the time. You can probably hear them squeal though. So the first thing is what nobody understands. And Goldman Sachs just put a note out on this, 15 pages of boring drivel. I'll give it to you in about less than a minute, okay? The SLR, supplementary leverage ratio, somebody kill me now, this sounds really boring, it's going to improve liquidity. But it is so important. Now I think I'm going to have to move that cat, aren't I? This is the chart of charts we need to understand. I'm going to have to just open that door 1 second. The cats obviously run this show. Well, I also found my jacket on the way. So what's this saying? So what they've just done is they've basically eased the rules for banks, which frees up money from their balance sheets. And that money will probably partially end up in government debt, which is one of the reasons they're doing it, because somebody's going to buy that debt. But we're talking about some pretty extraordinary numbers here, sort of 5.5 to $7 trillion. So even if these banks are able to earn just a little bit of extra interest on that money, it will make them a lot of money. Now, which bank will benefit the most from this? Can you see that on the chart here? It is blue. I'm just checking that my glasses are showing the right color. It is that blue there, and that is BAC. What's BAC? BAC is Bank of America. And I could say we saw this coming. We did see this coming. Why? Because I gave a buy signal on Sunday to buy BAC at about 45.70 or thereabouts. And since then, Bank of America, after its classic textbook move, this one here, literally bloody textbook stuff, is up how much? How much is it up by? So there's smart people who understand this, and now up 3.6%. That doesn't sound like a lot, but I think it could go up bigly from here. So I still think this is a bullish setup, especially if we take out these 47.90 or so highs here, $48 highs. Those are the February and the November highs. So you take those out, and the world's your banker, if you know what I'm saying there. So obviously not financial advice, but this looks very, very bullish. But overall, this is very, very good news, because all that money will help to keep interest rates down, because there's more demand for bonds, therefore. So overall, a good thing. Winston is sighing. Yeah, he is a little sleepy at this time of the day. You have to bear in mind it is 9 p.m. our time, as we're in Hong Kong at present. So therefore, we're 12 hours ahead of most of you lot. So what stocks are we therefore going to buy? Well, would you like to be in these stocks before they go up? Because actually, it's really predictable. And it isn't some sort of magic 8-ball you need for it. You just need rules and learn how to pick great stocks. And it's so simple, you'll shake your head and you say, why doesn't everybody know this? Why doesn't everybody do this? Well, because not everybody comes and shows up. I got a comment yesterday, someone saying, Felix, can you do this a few hours later? I'm in West Coast time. It's 7 a.m. my time. That just doesn't work for me. And I wrote back, well, one of my early mentors was always in Chicago. And the only time he could talk to me was at 3 a.m. my time. And I showed up. And I'm very glad I did. So it's a question of like wanting to learn. Like, do you actually want to retire better? Do you actually want to have more money? Do you actually not want to be worried about your investments and your retirements, all that kind of stuff? And if that's you, then come and join me on Saturday. It's free. It's about an hour and a half, felixfriends.org/webinar. So even if you start off in your PJs, I won't be able to see you. So you can sit there naked for all I care with a drip of coffee going into you. But I know the people who have showed up and paid attention benefited from this tremendously in the past. So come and show up there. And yes, you can hear the naughty cat, can't you? Is it Winston's birthday? Is it? No. He doesn't really have, well, we don't actually know when he was born, you see. So he has sort of, is an official birthday, I think, on May 1st. But that's a completely random date we sort of picked just so he has one. But we have no idea when he was born. He was adopted. Now, the next point why we are bullish, and yes, there is a lot of like noise around here. Let me see actually if I've got noise suppression on. Yes, still pretty noisy, isn't it? Cats are noisy. This data came out yesterday, and it's bigly important. I mean, it's really like earth-shatteringly important. It's GDP growth for the quarter. Right? Does anybody think that the economy might matter? The US economy? If you think it matters, put a 1 in the chat. If you think it doesn't matter, put a 2 in the chat. Now, we're expecting it to shrink moderately at 0.2%. That was kind of the expectation. Now, it came in at minus 0.5%, which is quite big. Quite a big difference, right? It's also a huge drop from the 2.4% before. Now, a lot of this is going to be influenced by extra imports from tariffs. But still, if you take this data and you combine it with the data that literally came out 40 minutes ago, which is this, and you can see how this has all got 3 stars, right? Which means it's important. And you get that information where? Where can you get that information? In TradeVision. There's a link down below there too for TradeVision. There's a free trial. There's a QR code you can even scan. And then you can get that data and it pops up for you every single day. And you'll see which one matters because it has 3 stars. That's the important data. So we've got personal spending. We're expecting it to be 0.1%. It came in negative. Personal spending dropped. What about personal income? We're expecting that to grow 0.4%. It dropped 0.4%. It's almost as if on the estimates, people just forgot to put the minus in front. That's a big drop. Now, is that good or bad? Is that good or bad? What do you think? Put a plus in the chat if you think it's good. Put a minus in the chat if you think it's bad. And then inflation ticked up slightly, 0.1% from expectations. Not a huge move, but just a little bit. Now, to me, let me see if you agree with me on that. With me, the lower spending and the drop in personal income is good news. Now, not for the people whose income dropped, obviously, but I do believe it is good news. And it is good news for the following reasons. Fox, thanks my friend for pinning the webinar link there. It's very, very kind of you. In fact, I can probably do one better and also pin that to the top of the chat for anybody who hasn't signed up for that yet. Did that just pin? Yeah, that just pinned. Why is it good news? Because a slower economy does what? Well, it means the Fed must cut rates, right? And I know everyone's like, oh, this Powell guy, he's never going to cut. He's never going to cut. He just doesn't want to cut. But there is you can trade the expectations of when the Fed cuts interest rates. Sounds a bit balmy, but that's what people get up to. People get very bored. You can trade it. And for September, this is September. So for September, we now have, so this is the interest rate now. It's 4.25%, right? And the likelihood of a quarter point cut or a half point cut is now, what's that? 80, 90, 91%. There's a 91% chance that we're going to get a September cut. You know what that means? What goes up in a cut? Fintech goes up in a cut. The sort of archetype stocks go up in a cut. All the high risk stuff goes up in with a cut. Crypto should go up with interest rates cuts. All that kind of sort of high risk stuff should go and look about as exciting as Winston looks right now. So this is bullish stuff. Now you're therefore going to have to ask yourself, well, what stocks do we buy to prepare for this? Well, as I say, I'll teach you that on Saturday if you come and join me, felixfriends.org/webinar. Link is down below. What are those crowns next to some people's names? I think they are the people who are most active. I think it sort of rewards the most active now. So you're gonna have to be a lot more active. Yeah, housing is another one. Construction I see in there for sure. This is also beautiful. What's this about? Well, remember the big beautiful bill? And I think I did a video on that. There was a section in that. What was it called? 886 or something. It basically allowed the US government to kind of tax foreigners who had invested in the US, sort of fairly randomly, really odd kind of provision. That just got nixed. It's gone. And that's therefore a good thing for the stock market because foreigners will no longer have the concern that they might get sort of penalized randomly by the US government. SoFi, yeah, I'm also thinking SoFi. SoFi's been on our buy list this weekend. It's looking pretty good. I've got a call option open on SoFi at present. And then we got this. Ludnick says, China deal was signed and sealed 2 days ago. Chinese press just confirmed it. So it's a real thing. Now, this isn't a fully fledged sort of 100%, everything is done kind of a deal. This is more of a sort of like pre-deal, I imagine, around let's get some rare earths moving and that sort of thing and supply the Chinese with ethane, which they need to make plastic. So good news though. And then we are also promised more deals. It's all good news. And the deadline, remember that 90-day extension that expires July 9th? It could be changed, says the White House. So there isn't going to be this cliff. We're not going to all like go back to, you know, have a look at this. This is very cute. Can you see Winston there? Winston with Albert, obviously more important than interest rates. This is naughty Albert, very stripy. So you're going to sit in front of the camera, are you, Albert? Brilliant. He's like, we need a cat cam. Come on, this is racism, isn't it? Speciesism. So yeah, but in all seriousness, this is good news because it just means that while Trump talks very tough, he doesn't act as tough on tariffs. And for us in the market, that is a beautiful thing because it means the fear is just gone out of the window with egg fried noodles, as they say. Now, this is really the unprecedented, truly unprecedented. We've never seen anything like it. We have never seen an investment into a new technology to this degree. So the US hyperscalers, who are the US hyperscalers? It's Amazon, it's Microsoft, it's Google, it's Meta, it's Oracle. Together, we expect them to spend over $1 trillion 2025, 2026, 2027. And look at how that's going to go up. Look at how that's going to increase that spending. Just extraordinary. And I'm sorry, I'm surrounded by cats who all want to get in and out of rooms. Where can you find the online seminar? Are you serious? There is a bar at the bottom of the screen. There is a link pinned to the top of the chat. There is the same link in the description. my friend. So please click on one of those and you shall be set free. So this is extraordinary. And what it's going to do is, well, it's just going to drive massive, massive, massive growth in obviously AI chip manufacturers and the whole kind of space. You know, your Oracles, your Dells and everybody else who's kind of in that supply chain space of semiconductor kind of supercomputers. So this is just going to continue. And maybe this is going to be an enormous bubble and maybe it'll be an enormous waste of time. Who knows? Maybe it'll also be the best spend ever. Who are we to judge? But we know the party is happening. Why wouldn't we go and enjoy it? Right? That's the way I look at it. So, you love cat sounds. Well, then you're on the right channel. We've got plenty of that around here. So the question really is just like, well, what do we buy as a result, right? What stocks do we buy as a result? We'll have a couple more we want to look at in a second as well that are related to what we were just talking about, but come and join and learn how we actually do it. You can even scan this QR code. Just point your camera at the screen, unless you're watching it on a phone, in which case obviously you can't, and you can sign up that way. It's completely free. And then we've got some any Boeing bag holders here on in the channel. Anybody who's got it holding Boeing stock? Any of you guys holding Boeing? Put a B in the chat for Boeing holders. Look at this. The colony of the United States, referred to generally speaking as the United Kingdom, is to buy F-35s from the United States, right? Which is good for whom? Well, it's good for Boeing because they make them. And if you look at Boeing, well, look at that stock and look at what it's just done, my fellow BA bag holders here. God, these cats are noisy. It's going to drive me potty. You see what we're doing here? We are breaking out, my friends. Breaking out, not an acne, but just generally breaking out, which looks very, very good, right? So let me put on the pre-market heat map and I'll put Albert in his space. This is yesterday, by the way. This is not going to help you very much. I'll be back in 10 seconds. Right, Albert, noisy over there. Come on. Right, Albert's in, Sabrina is out, who's actually the noisier cat. So very little has been achieved, but the morning looks good, doesn't it? Doesn't it look bright and bushy-eyed and beautiful? I certainly think so. So that's all good news, isn't it? We got any other good news? I think we do. Nike, my friends. Any Nike bag holders here? Put an N in the chat. Redemption is here, my friends. You are about to be forgiven for your sins of not setting stop losses. And therefore, I mean, really, these cats. I'm going to have to do something about that, aren't I? Crikey. Well done. Right, cats have been contained. Give me 7 golden retrievers any day. So any Nike, yeah, there are some cat risk management. Yes, absolutely. The girl cat is noisier. Yes, much noisier. I know. Who would have thought, hey, women are noisier than men. She is very noisy. And then the kittens start making sounds, and obviously then she wants to go into the kitten room, and you know, they're very sweet though. They are absolutely adorable. I just played with them before this. They're adorable. So we look at Nike, right? Let's get our textbook out. What does the textbook say? If you haven't got the textbook yet, come and join me when and where? Tomorrow at felixprehn.org/webinar, 10 a.m. New York time. You look at that yellow line there. It is yellow, isn't it? That is the 50-day moving average line. It is now pointing up. We love it. That line there in pink is the 150-day moving average line. We are above that too. And then you look at this bigliest gap up ever. We're going to call it the Bill Ackman gap up. Did Ackman sell this? Did he sell out of this? I think he might have done, right? Fund managers. Actually, he should have sold out of this a long time ago, I think. So we got this monster gap up. Why? Because earnings were actually pretty decent. I mean, there was still some pretty ugly things in there, like China revenue down 21%, inventory flat and that sort of thing. But it was a surprise. 16% profit surprise. So this takes Nike officially out of the doghouse, provided we close approximately here. So that's kind of key. And then, you know, to go back to break even, if you bought at the top, what do you need? 157%. How much did the stock drop by? Stock's down 61%. So you need 150% rally because this thing went down 60%. This is why we sell early. Our losers, we sell them. We have stops. We do not back hold. That's why. Now, of course, the hope is that it'll hopefully turn out that it does what AMD is doing, which is continuing the party. And it's been a very, very nice rally, right? So since our entry point sort of here, 21% up, which is good. The whole semiconductor space doing very, very nicely. Palantir going nuclear, quite literally, thinking about making a video on that. You guys interested in that nuclear deal they've done? If you are, put an N in the chat and I'll take that into account. Oh yeah, he moved into Nike options. Yeah, I saw that. He sold the shares, right? And he bought options, trying to undo some of the damage, which I don't know whether that was a smart move. I don't know what he paid for the options, I suppose. But yeah, here is Palantir hovering around all-time highs, which sounds amazing. And then I say BA also looking very, very nicely here this morning. 7 minutes to go till the market's about to open. Okay, there is a fair demand for the nuclear thing. Okay, we're just digging into that a little bit deeper and see what we can learn from that. AMD, you told us not to buy. I did, yes, I did. And then I never tell you what to buy, to be honest with you. I do sometimes tell you what not to buy. Yeah, I don't buy falling knives. So we have rules where we buy things. We have rules where the risk reward flips in your favor, and that's where we buy. So you can always in hindsight say, oh, would have been better to buy at 80, but could have gone to 50, very likely. So we don't use hindsight, right? Because we haven't got the benefit of it. Therefore, we have to use a system that relies on the same rules that Wall Street's been using for 50 years. And because Wall Street's using it, it means when we spot something, it's quite likely that a lot of people on Wall Street will spot the same thing. And then look at the volume, okay? Maybe you don't believe me. Maybe you think charts are a little nonsense. That used to be me too. But look at the volume down here, right? Not a lot, you know? And the biggest volume days we had were on days where we actually sold AMD before that. So really the volume was really, really, really flat down here. And then at the point where we actually exploded out of this range here, right there. And we said buy at 119. So we were a little early actually. But where we really exploded out of that range, look at what happens to volume. So what does that tell you? That tells you the institutions had the same idea that we had. And that's when things started to change. So we follow the same rules institutions follow, a lot of them follow. And that's what we do. It takes very little time. I never care about buying something at the bottom. I never care about selling it at the top. I'm very, very content to buy it while it's going up and to lock in profits before it drops down. That's pretty much all there is to it. So if you want to learn that, come and join me tomorrow at felixprehn.org/webinar. So I say the link is in the chat here, but I'll pop it in there for you one more time, that kind of thing. Now, another thing you can do is if you see something like that, where you say, okay, I want to come in over 119 or something, and this is going to come out, it's only a beta version, but it's going to come out in Trade Vision shortly. You can set an alert now and say, hey, look, if this moves up over, 119 or whatever it is, in the next month, say, whoops, let's do that again. So say, 119 over the next month, hit save, and then you're going to get a notification that'll pop up in your browser. It'll also, well, we've already we've already exceeded 119, so that doesn't work. And then also on the mobile app. So say if I wanted to buy it at the 150 or whatever for some strange reason, then that would really help us. Similarly, you could obviously set alerts for when things break below, and then also you be alerted that this is actually gonna happen. Alerts came out today, says Eduardo. Okay, for you too. Okay, brilliant. I don't know how big the beta version is. I think I'm one of the earlier ones. I would hope. But yeah, it's going to be super cool. I'm really excited for that. Excited for that to roll out to mobile as well. Dr. Denise, appreciate the kind comments there. Is AMD extended? No. I mean, I don't think so. I mean, potentially it can go a lot higher. So at the moment, the whole sector is just doing very well. So as long as the whole sector does very well, as long as that, did you see what I just showed you? How much money these guys are going to spend in this is 2024, 2025, 330 billion, 26, 390 billion, 27, 420 billion. So as long as they're going to keep spending that, AI stocks, chip stocks should do pretty well. That's basically the idea. See you all Saturday. Brilliant, my friend. We're about to hit bell time. We are indeed. We are indeed, my friend. It's very kind of you to let me know. I love the alerts. Brilliant. Yeah, that was one thing we were definitely, and that was also one thing we thought, one of the key reasons for the mobile app was like, well, we can trigger alerts and stuff like that much more easily, right? So a lot of stuff coming there. We're working on so many things in parallel, which is super, super cool. And honestly, you guys signing up to Trade Vision, what it does is it obviously creates a little bit of cash flow for us. I know it's like $90 a month or something, but we can then use that, and we literally just hired like 2 extra developers. So it just means we can work on more projects at the same time and roll out more of the features that you guys are requesting at the same time to build literally the best place for all your investing information and tracking and journaling and news and alerts and indicators and everything else. So, which is really, really cool. I'm very excited for what we're doing here. So if you haven't already, check it out. felixprehn.org/tradevision. There's a link down below to that too. I'll put it in the chat as well. There it is. You can click on that. There's a free trial. You don't see where the access alerts. Okay, maybe you haven't got it yet. Once you get it, it'll be up there at the moment in the top right. It's a little alarm bell that says beta version, so maybe not everybody's in on that. I think we might be scaling that out, and we do that often with features just to make sure it actually works and it doesn't break everything. Can we talk about Tesla? How much is Trade Vision? Trade Vision is $19 a month. If you pay monthly, if you pay yearly, I think it's $16 a month. So it becomes, the intention there is just to keep it very, very affordable. There's so many apps out there who do like a quarter of what we do, and they're charging like $60, $80 or something. But our intention is actually just to help a lot of people. So we got to charge something for it because we have a lot of overheads and data and service, and we've got a team of about 15 people on this full time and stuff. So, but every dollar basically you send us goes back into the team. So it just accelerates the whole development. Oh no, it is the market open. Winston, somebody should have said something. Why didn't somebody tell me? The market is open, folks, and I believe it is a big and bushy-eyed, beautiful day. It is a day for stretching one's paws and for enjoying the marvel that the market has to offer. We look at some of the big boys out there. NVIDIA is looking good, looking green. The fear is just dissipating entirely. We're at a 16.2 fear now on the VIX, which is just extraordinarily low and absolutely marvelous for a rally. We look at some of the big guys out there, like your Microsofts continue to climb. The big banks continue, 0.7% down, maybe a little profit taking, not exactly a big deal. Palantir, basically flat, 0.3%. What about fintech loveys? SoFi up half a point here this morning. Is that a gap up? That is a gap up. That is a gap up. It is the world's smallest gap up. Only visible under a microscope, but a gap up it is indeed. And why does that matter? Because there are a lot of scanners out there that look for gap ups, and a lot of like algorithms will then follow the gap up. And you see that, right? We're jumping up now 1.5%. So very, very happy with that because I have a safer position open. So hopefully that'll make me some money. Love this bell. It's nice and noisy, isn't it? This has got to scare the life out of the cats. Oh, no, they're quite used to it. I mean, come on, they make far more of a racket than my little bell here. They're okay with bells. I don't think that's a big deal. Zim, yeah, I saw that too. That's just starting to, oh, yeah. That's a gap up here. Look at that. Look at that. There is life in Zim. We got any news on that? Is it just a... No, it doesn't. It's just bouncing back up to the 50-day moving average line, which is very, very good to see. Is Winston still chilling? Winston is still chilling. Hang on, I can... obviously, that's what everybody's here for. Let me... there he is. Seems pretty chilled to me, don't you think? Winston, you chilled? Pretty chilled. That is one chilled dog, but only because he does about 3 hours of exercise. Zim is up 5.5%, which is pretty good. Moved largely to cash after tariff relief rally, scared to get in again at all-time highs. Well, you know what happens with all-time highs? Higher all-time highs follow at some point. Depends obviously what stocks you're in, but I mean, if you watch the beginning 10 minutes of this video, you'll get my bull case. I think, and this is a little political, I think Trump is somewhat given up, or maybe he never intended to go with the full sort of war mode on tariffs that he initially started with. Maybe that was just a negotiation tactic, and I think they're just going a lot softer on a lot of stuff, and the market absolutely loves it. So we're getting tax cuts, we're getting relatively low tariffs, we're getting trade deals with everybody. Life's beautiful, right? We get all that AI expenditure, we get that massive bank liquidity pouring in. The tax cuts are going to really help the AI capex to come in. So why would the market not be extraordinarily happy today? So that's really the way I look at that. What about Circle? Yeah, it's honestly hard to tell you much about something with so little trading history. It is obviously positive that it's formed that sort of V here, but I'm not in it. I don't particularly care to be in it. It's just, there are a lot of things we can invest in. It doesn't have to be that, but obviously if you got in here, then, you know, good luck to you. Amazing, congratulations, and please set a stop to keep those gains. BBAI, that's a clear breakout, right? And we talked about it yesterday, I believe, and look at the trading volume here. Look at that institutional money pouring in. So that looks very, very good. Despite the slight pullback this morning, to me, that looks very, very good. Will rate cuts cause gold to go down? No, not necessarily. I mean, Groy took a little bit of a tumble this morning here, 5% down. What about some of our other gold stocks? Winston's gold stocks. In Ego, that's also dropping. SKE, that's doing well. And then gold itself is dumping somewhat. Yeah, but, you know, we got an ad here, and so this isn't really a particularly big deal. So these are volatile stocks, right? So I'm not surprised when something goes down 5%. What else we got there? AEVA, some of you guys still in that? Look at that. That's the gift that keeps on giving, isn't it? How much is that up by now since we called it an entry? 341%. That's got to be one of the bigger ones we called in the last 6 months or so. HIMS is recovering. Yes, it is, which is good, obviously. Very, very happy for anybody who's in HIMS. Still below the 50-day moving average line, so I'll still be a little bit cautious, but it's moving in the right direction, it's true. QSI, I think we're still in that, aren't we? That looks decent, just flat. Like, you know, no real excitement there, but flat. Check Palantir, we just did, my friend. Oh, it's coming down a bit there, 3% down. Yeah, but what's 3%? I mean, seriously, like even since the 14 April entry there, it's up 40%. So you just have to just grow a bit of a thicker skin that these stocks do move, you know, it was moved 7% here on the 5th of June and then continued the rally. So it's just, don't look at the percentages, just look at the pattern. Is it still in this general upward trend? At the moment, it still is. So there is that. Nike, yeah, Nike looking very good. We looked at that a little earlier if you just joined. And that party just keeps on going, 15% up here, which is fantastic. So looks bullish, actually. Yeah, if we close a bit above sort of 68, 69, we're back in sort of buy territory for Nike there, which is good. Estee Lauder, that was on our list, and yeah, look at that gap up here. That doesn't get much more bullish than that second gap up here on the way up. So looking very, very good. Another good call from us, I'd say. And it's about timing. Yes, it is about timing. It isn't about buying it when it's falling. It's about buying it when it's going up at the right time and understanding why. That's really what this is all about. There are about 4,000 people here. 590 have hit the like button. The French Foreign Legion accepts recruits for 6 years at a time. Appreciate the likes, my friends. Thank you very much for that. SoFi is going strong, as is the voice of my kitten, apparently. Yeah, SoFi looking good there, which is good. Nice to see a little gap up, 1.5% up here today. I think the interest rate cuts and so on coming should be good for that whole space. Why is the market down again? Well, it depends on what you're investing in, my friend. So overall, if we look at QQQ is up. SPY is up. So I don't know what you're investing in that you're down. It's, you know, challenging. Why no 50 DMA? D? What is the D for? Daily? I know EMA and SMA. I don't know DMA. What does it stand for? Let me know. But generally speaking, simple is good. So that's why we use simple. SMA stands for simple. What else we got here, my friends? Made more dollars in the last 30 minutes then. Okay, I'm happy for you, my friend. Mara, yeah, still nothing. I mean, still, what do you see? Right? It's just basically moving in that sort of sideways pattern, no particular direction. It's neither bullish nor bearish. It's just sort of sideways. Same could be said for things like MSTR, which just haven't really done anything for absolute ages. At some point, I imagine they will. But at the moment, we are once again in one of these sideways patterns here. So we need to break through that, and then we can go back up to 420 or thereabouts. CAT, yes, we have lots of those. You're talking about Caterpillar. Yeah, and that's also another nice one we called, and looking very, very good there, as we'd expect the whole construction sector to actually do quite well. How do you see July? You know, I see it sector-based. So I always see that there are sectors, there's stocks that are going to make us a lot of money. And there are lots of sectors and stocks that we don't want to touch. So I just don't really look at, like, what does July do? I'm just like, look at each individual chart. And each individual chart tells us what to do. And maybe a little bit of fundamentals. If you want to learn that, come and join me tomorrow. felixprehn.org/webinar. Link is down below. Winston's going to teach you actually how Wall Street invests and why and how. And it's going to change how you look at stocks, like forever. When I first learned this, I was like, why this? I just couldn't even know what to say. I was just like, well, why doesn't everybody do this? Why is this so simple? Why isn't everybody a millionaire? I just couldn't believe it, honestly. So come and learn what I've learned from my mentors. And how are our likes doing? At 800, I think we'll have to take it, Graham, but I appreciate you whipping the crowd into line as a good sergeant major should. And I look forward to you joining us tomorrow. felixprehn.org/webinar. I think about 2,000 of you signed up already, which I'm very excited by because those sessions are always super, super fun. And enjoy your Friday. I think it's going to be one of the most beautiful market rallies we've seen in a long time. But it will not be even. There'll be lots of stocks and sectors that will not participate. And then there'll be those who are going to make a lot of money. And we're planning to be on those. So come and learn how we're going to do that tomorrow. Felix Prehn, webinar. Winston and I say all the best. And